I mean, we're not market timers.
Right.
We're not a guru that can, pick when the market's going to pull back or correct. We talked about, I wrote about it and talked about it on the show in February, but that's historically what had happened.
Sure.
I didn't know if it was going to happen. If I knew for sure it was going to happen, yeah, we'd go to cash.
Yeah.
But you just have to look at probabilities and history and then make your best decisions. But you cannot consistently time the market, come in and out at the right times.
Sure.
You may get lucky and come out just about at the right time, but then when do you go back in? Most time people miss that upswing. And they end up getting back in right about where they got out anyway. So or they're too late. And they miss a lot of it. So it's very hard to time the market. I'm not a market timer. You have to have good diversification and asset allocation, proper amount of money and safe stuff. Take the risk with the proper amount of money, and everyone's different. Every family, every couple, every person. And then you live your life.
Sure.
You don't look at the news every day, what the market do, and get freaked out. It's just you let the market do its thing, what it always does and always will do.
Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Anchored in family values, Wayne offers practical advice to help you get the most out of your retirement years. For more information, visit today'sretirees.com. Now, here's your host.
And welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Now, unless you live under a rock, which I doubt that's happening in our area, you have noticed that the stock market this year has been one of the biggest roller coasters I have seen in my lifetime.
Well, I don't know about that.
Since I've been paying attention, maybe that should be better.
I mean, that's called volatility.
It is.
And if you remember back in February of this year, you may not remember, but in this show, we talked about the off-presidential election years.
I remember that.
And historically what has happened since World War II. And when an off-presidential year starts off with a negative S&P 500 in January, so in January, we were negative this year.
Sure.
So historically, how many years is that since World War II? 80?
Yeah, right at 80,
70, 80 years. When that situation happened in an off-presidential election year, there was a market volatility following throughout the year with a health-restoring market correction.
Okay.
And that's what I said historically happens in February of this year.
Right.
Okay. And I even wrote about it in my investment letters to my clients. So I told them what to expect. And that's what's happening.
Okay.
Now, I'm not a genius or anything, but I follow people that are.
Sure.
And they're very technical people, and they look at history and what the market does, and the market repeats itself. It just does. The average gain during those same years, that time period, when that situation happened, was by the end of the year, the market was up 4%.
Okay.
That's average. So it could be down 10 and up 10,
right?
Down 2, up 2, whatever. But the average over all those years was 4% by year end.
Okay.
Now, whether that'll happen or not, the market would have to get up over, 4,700 for that to happen this year. But we'll see. We're taping this show now. The market just had a nice rally for a couple days. And the market as of Monday is attractive for purchase. Okay, so instead of dollar cost averaging, I'm saying, and I'm doing for my clients, we're just going all in right now.
Okay.
No more, every 2 weeks or every month, buying in little by little on market weakness. I'm choosing to go in. So keep that in mind.
Okay.
A few months from now.
So we write this down for.
Write this down. But yeah, with everything happening, the inflation starting to pull back, supply chains opening up. The dollar is so strong right now that's up like 11% recently. So it looks good. Everything looks good. But I don't want to talk about that. I want to talk about today and the past, like up to this point. Like, how are people doing? You know, what did they do? What are they doing during this volatility? Are they afraid? Are they selling? Are they getting less risky? Are they putting more in?
Well, you know, that was one of the questions on my mind. Your clients, and we've had this discussion in the past, are they calling you and saying, what do I do?
No, they're really not, except for one. So
you always have that one.
Yeah, you just have a couple. But yeah, I've had a few calls, you know, throughout the summer, or just. But of course, during meetings and reviews, we have discussions about this stuff. But as far as people calling and saying, "Oh, get me out, sell, you know, get me less risky," yeah, I had one this past week, and I understand it was a person in his 70s, done working, you know, has a nice chunk saved, but is kind of freaking out with what is being lost. He does have a big chunk safe too, so that money, we talk about a safe risk ratio.
Sure.
That money's not going backwards.
Right.
So, you know, big hunk of his money is not losing, but there is a portion that is losing. And that's what happens when you're in the market.
Right.
How much you're losing depends on how much risk you took initially. So thankfully I was able to just settle them down and just wait. And I asked, are you going to need any money from this? No, you know. When do you think you might need money from this? You know, year and a half, 2 years. Okay, so we don't need to touch this at all. When we need to make a withdrawal, we can go to those safe accounts. So, you know, just relax. Just let it sit. This is what it does. I wrote about it in February. This should be no surprise to people. We haven't had market pullback like this for a length of time since 2008. Do people think it's going to keep going up forever and ever, every year, every single? I mean, what do people think? I mean, sometimes it just amazes me that they get nervous or scared or surprised or worried. You know, what do they expect the market to do?
Sure. Well, I would think, and I'm not a financial guy, you are, but I read and I talk to folks. If you look at since 2008, and if you've been in the market for any length of time, you look at where you started and where you are now, you should be up considerable.
You could even go back to 2007 and do the same math, where you put money in 2007 and then you took a beating in 2008.
Sure.
And then see where you are today. You'd be amazed. You'd be way up. So, you know, it's what it does. If you can't handle these pullbacks, get out of the market.
Sure.
You know, not now.
Right.
Once it comes back.
Right.
Just get out. Why torture yourself?
Right. Yeah. Don't live on that precipice.
Yeah. I mean, it does amaze me. It's just like, I don't know how someone could be surprised when this happens.
Sure. Right. Well, friends, when we come back, we're going to talk a little bit more about this year and what you've been through and what kind of changes. What are you thinking? How are you thinking? And maybe Wayne can talk to us a little bit about what you should be thinking about for the upcoming year, because, you know, this year we only have, 3 months left in round numbers, and things change. We've got an election coming up. You've got war in Europe. Who knows what's going to happen tomorrow, but hopefully we can work our way through this. You can go to Wayne's website at todaysretirees.com, todaysretirees.com. We'll be back right after this.
We've all heard the word rollover when referring to an investment account at work, or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? One thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands, where you have the whole universe of investments and choices, not just what your employer tells you can pick from. So contact my office for a free consultation on how to roll over your old retirement account. A certified financial planner is a true professional, a well-rounded holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find an independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio.
And welcome back to today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We're talking about the 2022 stock market. And if you live in Northern Ohio, you are familiar with Cedar Point. And it's like riding a roller coaster today, isn't it, Wayne? Yeah. You know, I was reading, I don't know if it was yesterday or anyway, recently, year to date, from October last year to this year, the S&P's down about 20% in round numbers.
More than that. Yeah.
The Dow is down the same kind of numbers, but we go back to our first segment when it was down in January in an off-year election, is what I heard you say. Then by the end of the year, it has recovered plus.
Well, average. 4%. Yeah. What followed was a lot of volatility, big health restoring market correction. Sure. These are good.
Right.
These corrections bring these stock prices down to where they should be.
Okay.
And they get the people out of the market that shouldn't be in it.
Okay.
That's a couple good things with market pullbacks. You brought back to reality a bit. Then we do it all over again for the next span.
So,
right? So what's important is, with what's been going on this year, people want to look at what they did to their portfolio. Did they make any changes? Did they call their advisor or financial planner or broker?
Okay.
Panicking. Were they tempted to get off of the plan? In other words, what they originally agreed on years before as far as their investment risk tolerance and how much they put in the market. Were they second guessing themselves? That's what you want to look at. Or is it just another day? Go to work, have your family, live your life, not even think about it.
Sure.
Hopefully that's what it is, because that's what's best. Once you make your decision on how risky you're going to be and how much you're going to have in the market, that's your decision. You let it do its thing. When the market's low like now, especially if you're still working, you're buying shares low for in your 401k, your 403b, your other retirement plans. Okay. So you're getting shares at a discount right now. Those are going to come back up at some point. If you have cash, now's a good time to buy in. Buy low, sell high. It's hard to do for some people. But that's what you're supposed to do.
Right.
Right. And but if you were second guessing yourself and you've made calls to your advisors and you're freaking out or you're nervous or you're arguing with your spouse, once this market returns, you're going to want to change things up.
Sure. Yeah, you don't want to live, and maybe your family circumstances have changed over the past months or year.
Sure, you could have retired, you could have got laid off, you could be in between jobs, you could have got sick, you could have a change of heart or change of objective, but you don't change now.
Sure.
You wait. Yeah. And that's the risk. I don't care so much about people being uneasy when this is happening. It's the risk that they're going to make a decision that's going to really hurt them. Sure. Like going to cash at the wrong time or going from stocks to bonds at the wrong time.
Well, if you were to, with it being down, let's just say it's around number 20%,
It's more than that.
Right, but just for the sake of argument, if you got out now, you're going to lose 20%, and then there's, how do you recover that?
Well, you're going to recover it slowly and save for investments.
Okay.
If you're in a CD earning 2 or 3, or in a fixed annuity earning 4 or more, you'll get it back, but historically not as quick as what the market will give it back to you.
Okay.
The market can really, just look historically, the S&P rate of returns, for the last 70, 80 years. I mean, it's not down consecutive years often.
Right.
So you take that beating, but it comes back quickly. The problem with the market is, like, if you have a 40% drop and you have 100,000 and the market drops 40%, you're down to 60.
Sure.
If it goes back up 40, you don't have your 100 grand back.
Right, because you're starting at the 60.
Right. So you actually have to do about 67% to get to your 100,000.
Ooh, okay.
So, and we're down in more like 30s right now, or have been, depending on the low point of the market. And we'll get it back, in my opinion, we'll get it back quick. History shows in these off-presidential election years, when the market's down in January, when it started off, it shows we will get it back quick.
Okay.
We'll just have to see.
So I'm hearing, and before we go to break, maybe this will be something you can talk about when we come back. And you had said, you had talked about your clients buying in now because basically things are on sale, or at least they're where they should be.
Personally and for my clients.
Okay.
Yeah.
So we'll talk a little bit about that when we get back. Wayne helps people put together financial plans. That's what he does. He's a certified financial planner. I am not. I'm the guy that asks the questions, and he laughs at me off camera and says, "Why did you?" No, I'm just teasing. But do yourself a favor, do your family a favor, and get a hold of Wayne. You can do that through his website at todaysretirees.com, or you can call his phone number and set up an appointment at 866-626-3990, 866-626-3990. We'll be back right after this.
Certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent certified financial planner, one of the only ones on the north coast of Ohio.
And welcome back to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We're talking today about the 2022 stock market roller coaster. And I know that most of us have been, if we're in the market, some people really pay attention, others, just sort of go along, and they've got a good financial planner like yourself, and they've been trained by the financial planner to ride the storm, as it were.
I mean, we're not market timers.
Right.
We're not a guru that can, pick when the market's going to pull back or correct. We talked about, I wrote about it and talked about it on the show in February, but that's historically what had happened.
Sure.
I didn't know if it was going to happen. If I knew for sure it was going to happen, we'd go to cash.
Yeah.
But you just have to look at probabilities and history and then make your best decisions. But you cannot consistently time the market, come in and out at the right times.
Sure.
You may get lucky and come out just about at the right time, but then when do you go back in? Most time people miss that upswing. And they end up getting back in right about where they got out anyway. So, or they're too late, and they miss a lot of it. So it's very hard to time the market. I'm not a market timer. You have to have good diversification and asset allocation, proper amount of money in safe stuff, take take the risk with the proper amount of money, and everyone's different, every family, every couple, every person. And then, you live your life. You don't look at the news every day, what the market do, and get freaked out. It's just, you let the market do its thing, what it always does and always will do.
Right. So for those folks who are sitting, watching, listening to the program, and they're saying, they're having those second thoughts because of the volatility that we've seen, especially this year. I mean, if you're in the market, I would think you would know that there's some volatility in the market. There always has been.
Of course.
But certain folks, because of family differences, changes, or whatever, they're sitting there saying, should I really be here? What do I look for the future? Where should I be?
They should come in. Those are people that need help. So you lay out a plan, and not necessarily a big, thick financial plan. Sometimes that's what people think. It's really not that. I rarely give like a financial report or financial. It's not that. It's just basic, planning steps. Very conceptual, very personal. So it's not, sentences or instructions or whatever. It's just determining things, objectives and goals, and then how do we get there. So if they are feeling uneasy, they should start the process. Perfect timing when the market's down, because, we have time to put things in place. So when the market does rebound, we could make those adjustments and tweaks so they don't go through this again.
Sure. Now, just curious, going through the history and in the off-year election, where it recovers, is there a time frame? Does it recover in October or December? Or?
So historically, the average, the market was up 4%. So between World War II and now, off presidential election years, there's been, 40 of them?
Yep, probably. I'm not doing the math in my head that quick. But
so I think like 30 of those 40, because the market was down in January, those are the statistics I'm giving you.
Okay.
So of the 30, the average is 4, but that could be a wide disparity.
Sure, okay.
You could have the down 10s or down 20s. It might have took, till mid the following year to catch back
I
up.
see, okay.
So I don't have that precise of statistics. My people do. I mean, they follow it that tight.
Right.
But, that gets boring and tiring.
Sure.
Just what followed was a volatile year with a health-restoring market correction, and then the market ended up rebounding fairly quickly is the point, I guess.
So if a person is sitting on some cash and for whatever reason, or, and would you advise them now, and I think you've already answered this, but to do something now?
I don't know them.
Well, you had to talk to them, obviously.
Well, yeah, so I don't know if they should go in or not, but I don't know their risk tolerance. I don't know if they have plenty of cash. I don't know what their situation is. Me personally, I bought in again, with a sizable chunk this week. And this first part of October.
Sure.
So, 2022. These are recorded. Sometimes we do reruns too, so I just want to be clear there. But for clients, a lot of times when the market is high or uncertain, not necessarily record highs, but either record highs or just high, doing well, volatile but doing well. When I get new money from folks, from cash, rollovers, pension lump sums, CD comes due, whatever, new money. Typically, I'll wait and buy in on market weakness, kind of dollar cost average over time when the market has weakness. Take our time buying in.
Okay.
If they came from a 401k that was already in the market, right, they're in the market, then they roll it to me, we go right back in because they were in the market anyway.
Sure.
So market to market. But cash to market, a lot of times I take my time. But now it's going all in.
Sure.
Because the market, in my opinion, is attractive for purchase.
Right. But the most important thing is for that person or that family to come in and talk to you so you can help them know what to do and when and how to do it.
Yeah, very rarely do people have it all together. where they don't need a professional. Tiger Woods has a coach. These pros have coaches.
Right.
I mean, you need somebody. I have a lot of clients. They're doctors. They're professors. They're CPAs. They need help. I mean, I just, there's someone to necessarily teach them, but someone to hold them accountable, give them ideas, give them strategies. Make sure, remind them to get their certain things done, like their legal documents or beneficiary upgrades, or make sure their insurances are being funded properly, life insurances. Everyone needs help, kind of checking the boxes and making sure that they're doing what they're supposed to be.
Sure.
So so definitely ordinary Joes need help too.
Right. Well, that's the thing that I have found over the last, this has been about 10, 12 years we've been doing this.
Yeah, at least.
And what I like about working with Wayne and doing the program is that thing he always says, it depends, because he's looking out for your family, because your family is different than my family, it's different than your neighbors. And what you need, it depends on your situation and your goals and aspirations, and it's different than what I have. So Wayne puts together and helps you put together a plan that fits. Even though the market is going crazy, he can help you weather the storm and put together a plan that works just for your family. Well, unfortunately, we are out of time, but go to Wayne's website, a lot of information there, todaysretirees.com, todaysretirees.com. We will see you the next time.
Thanks for tuning in to Today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Visit todaysretirees.com or call 866-626-3990 to schedule a no-cost appointment with Wayne. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management, family-focused retirement and tax planning services, anchored in family values. Information and opinions discussed on Today's Retirees do not necessarily reflect the opinions of this station. Opinions expressed should not be substituted for individualized consultation with a qualified financial advisor. For specific information, call 866-626-3990 or visit todaysretirees.com.
Certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio.